expert, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
Nice to see you as well. So I have a question that it hit me after watching a Robert Kiyosaki video, I guess. Yeah, he is out talking about the Great Depression. It's already here, all the scare tactics. He's been calling this over and over and over again for a long time. But what I wanted to ask you today is, do you think the Fed, Jerome Powell specifically, do you think the Fed could take action that actually could cause another Great Depression? Do you think there are some things they could do? Not that they will do, but could they do things that would cause another Great Depression? What do you think?
Yeah, the question is, it's not what they do, it's what they don't do. So the Great Depression was caused because the government didn't step in and do quantitative easing and things like that, and they just kind of let things go. So if the Fed doesn't do anything, when they start raising interest rates and pull back on the quantitative easing and things start to collapse, if they don't step back in, I don't know that we could ever in this country see a Great Depression like we went through, because there's just too much demand, too many jobs, and we're too globally connected now from that standpoint. But we could see a severe recession if the Fed does not step in when the results of what they're doing from a Fed policy. I mean, it's clear, and let's be clear, the Fed has made a huge policy mistake this past year with the pandemic.
No
they
question.
Went
way too far. Yep.
Huge policy mistake. They've got no way out. The markets need to deleverage and unwind, and they're already starting the process. And, the question is, how far will they go until the Fed jumps back in? And they will jump back in. So they're not going to let it get out of hand and get out of control, because that's too much wealth lost. When people lose wealth, they lose confidence. When you lose confidence, that's what the snowball effect of a deep recession. Depression is probably defined by a certain percentage or whatever. But when you think of the Great Depression, I don't think we could ever have that again in this country, because there just were no jobs. And
there were also a lot of less safety nets, right? FDIC insurance, right? We had bank runs and people lost. I mean, there was, and again, mortgages didn't have 30-year fixed. They were 5-year adjust. I mean, there's lots of things that existed that exacerbated a bad event and made it drag on. And it's interesting. We saw the pandemic where, from a global standpoint, we didn't see demand drop much. Yeah.
So it's interesting, in terms of the way the world works now and the consumption-based economy that we have around the world.
Yeah.
It's hard to imagine a depression actually happening unless you get global war. If you have global war, then that's definitely possible.
Yeah. When I think about, again, I agree with you. The Fed made huge policy mistake, helicopter money too often, too fast, didn't pull off. It's just, and it's still going, right? They're not going to be done with, buying until March, supposedly. But when I think about this great deleverage, which again, we'll talk about more in episode 4, because you coined it 6 weeks ago and you nailed it. I don't know where that pain threshold is. I think the Fed knows that they need to deleverage. I think they know assets need to fall. Is that 10%, 20%, 30%? I don't know what their appetite is. It the speed, right? It's one thing to get another March collapse, right? Where it was down 33% in like 3 days. But, are they comfortable with a slow retreat? I don't know. What do you think?
Yeah, I think the slower it is, the more they'll let it go. I think the more severe and drastic it is, the more apt they will be to step in at a certain point, because again, you have to understand what that is. They can't let the world lose confidence in the United States stock market. I mean, that's the reserve markets of the world. Our currency is the reserve currency of the world, gets stronger in that environment. But, we can't let the world lose confidence in our stock market, because that would be devastating.
Yeah. So again, the Fed really only has a couple of policy controls they have, right? It's raising of rates. And obviously in this, quantitative easing, they came in and started buying index funds and bonds and all of that. That is going to be extracted, right? Supposedly in March, they're going to stop doing that extra stuff. Do you think the Fed's going to be raising rates 3 or 4 times in the next year or so? Do you see that happening?
That's what they're saying. I think they probably need to do more than that. But right now, that's what's on the table. And until we see the results and the effects and how fast and how severe, it's hard to say exactly what they'll do.
Yeah, I got to tell you, raising the rates from essentially 0 to 1%, if that causes some kind of market reaction, we got a huge problem, because normalized interest rates aren't 1%. They're probably much closer to 3 to 4%. So
yeah, they're kind of pinned. And you'll see people now across the spectrum, economists, investment management, analysts all across the board are all now calling it a policy mistake.
Oh,
And
yeah.
that's huge. And go Google Fed policy mistake, and you'll see the last time that was made. And I think it goes back to, I guess it'd be Greenspan that made the last
Yes.
policy mistake from a Fed standpoint. This one's huge.
Irrational exuberance. Remember that?
Yeah, this is huge. They went way overboard. They didn't need to step into the level that they did and keep going.
They stayed too long. The punch bowl was too much alcohol. Yeah, this is going to get interesting.
And for people watching, Felix Zuloff did an interview the other day. He's very respected, world-renowned investor about all this and what's gone on. And when you think about the last year, I mean, it was over $1 trillion pumped into the stock market in the last year.
Yeah.
I mean, think about that. That's more than's been put in the stock market over the last 10 years, I think, or something
like that. Something crazy. Yeah. There's a lot. And again, there's a lot of cash on the sidelines, record reserves, the overnight lit. It's just, there's just too much cash. There's just too much
capital has to go somewhere. So, the Fed is pushing people into risk assets. So as soon as that changes and treasuries become more attractive and things like that, that capital will go to other places. But, people have to put capital somewhere. And why do I say that? Well, pensions, investment funds, life companies, they have to earn yield to keep making their payouts. So they have to place capital. So where that capital goes is largely up to Fed and the policy. And that's why it's a policy mistake. Yeah. They've done a lot of damage, to people and to investors, and will have done a lot of damage when this unwinds. But, how far can it go is the question. And that's what nobody knows.
Yeah. Do you think they're one of the outcomes of them with their new resolve to kind of, beat back inflation? Do you think we might have a recession in 2022?
Yeah, I mean, again, that's defined by a dip in GDP. It's not really defined by, stock market. It's more about GDP.
Negative GDP
There's
growth.
just too much demand right now to even see that as an issue. But I can see markets dipping that much. Yeah.
Yeah. I actually originally, like 3 or 4 weeks ago, I was like, I think Q4 is going to be a barn burner. And it was 8.5% up on holiday sales, fastest in 17 years. So nailed that. What I actually fear is, we pulled forward a lot of demand, right? Oh, the shelves are going to be empty. Buy your gifts now, blah, 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 blah. And then we're going to get into Q1, Q2, and people are going to retreat. But we shall see. It's, I don't know. It's going to be, next year is going to be messy, I think. The great deleverage, all of these things. So
yeah, there's still too many caveats with, the coronavirus and, what variants can pop up now, whether, it's on the down, on the downtrend now with Omicron becoming, if it is less severe, turning more into what we know as a cold. The cold is a coronavirus. So it really all depends on, that's the big caveat out there that we still don't know. What's this thing going to look like? And are we going to get past it? And is it just going to become, like the cold and the flu down the road? That's the big one. But as far as demand goes, I mean, we just keep more and more demand across the board. For things. So that's really the key to a recession is demand.
Yeah. Well, where can people find you and see these amazing things you're putting out on your YouTube channel?
Yeah, gregdickerson.com. Everything is there. All my info. Go check it out.
Thanks, buddy.